Hi there folks, on this video I just want to give you a quick overview of a new update to the now infamous PCP spreadsheet, so stay tuned. So welcome back to the channel folks, JD here again with another quick car finance related video for you. I hope you're all safe and well. So what I want to do on this video is just give you an overview of the PCP spreadsheet as a whole, for those of you new to the channel who perhaps haven't seen it before. And then I also want to talk about the latest revision, which is, we're now on version 6.1, believe it or not, which includes something which I omitted on the previous version, and it's all to do with the voluntary termination point and where that lies if you apply an overpayment to the agreement. So today's video, by the way, is sponsored by Direct Gap. Direct Gap is a gap insurance provider. I've used them personally in the past myself. They're authorised and regulated by the FCA, independently rated with 5 stars. And so have a look at the link below, and you should find that they're up to 75% cheaper than most dealers. And I know a lot of you do often contact me and ask for any recommendations. So Direct Gap are definitely worth checking out. And in the future, I will be doing more of a dedicated video for Direct Gap, and there will be an affiliation link there for you to follow. So if you are thinking about purchasing gap insurance, stay tuned onto the channel, and hopefully within the next couple of weeks, I will be able to give you a more detailed overview of Direct Gap and what they can offer. So anyway, on to the video. So as I said, for anyone who is new to the channel, you may not have come across my spreadsheet. And if you send me an email here, for a one-off payment of £10, you can obtain as many updates to this spreadsheet that I make. And people are generally starting to find that it's pretty useful. People are starting to be able to gauge their own agreements, work out whether their agreements are a good buy, and hopefully save some money. So I just wanted to give people a quick overview as to what you can do with the spreadsheet, and as I say, just talk about this latest edition. And anybody who's already subscribed to the spreadsheet, you will be receiving a latest copy of this very soon, so look out for that in your inboxes. So let's just have a look at how this works. So essentially, and there's something which I can't emphasize enough, and I do get emails quite often saying that the spreadsheet isn't working quite right, and that's normally because there's a slight mistake being made when entering figures. So I just want to go through that again. So let's say we're looking at a deal and it's got a purchase price of £30,000. So we just enter that into the total cost box there. And there are 2 places to enter your deposit. One is your deposit, 2 is any dealer deposit contribution that you may be offered when you're taking out the deal. So let's say we're going to put £1,000 in, and let's say the dealer are going to put £1,500 in as well. So we've got a total deposit of £2,500. It would help if I put the right figure in at the start, wouldn't it? So £30,000 less £1,500 deposit gives us a loan amount of £27,500. I cannot again emphasize this enough. People often think when they're signing up for a PCP agreement that they are only borrowing the difference between the deposit paid and the final value. So let's say you buy a car for £30,000 in this example, you put £1,500 deposit in, and let's say you've got a guaranteed future value or balloon payment in 3 years of £15,000. People sometimes think that they are only actually financing, in this case, £12,500. So £30,000 less your £2,500 deposit, less your £15,000 guaranteed future value, you're only financing 12.5, and that's not correct. You are financing anything after the deposit, whether you pay the balloon payment off or not. If you go onto Experian or somewhere else where you can check your credit file, you will see that the total amount financed is the purchase price less the deposit. So that's just something to bear in mind if you're considering a PCP. So let's use that example. So guaranteed future value, GFV, we put in there £15,000. And option to purchase fee, that's usually minimal now. It used to be sometimes hundreds of pounds, but now it's probably 10. So you can put £10 in there if you wish. It's not going to make a lot of difference to the actual figures. And let's say you're going to start this agreement this month. Now on the amortization table, which is this list at the bottom, whenever you take an agreement out, your first payment is usually taken 1 calendar month after. So as I put November 2020 in there, the amortization table will assume that you are making your first payment in December 2020. The APR goes in there, so that's the quoted APR. Again, make sure you are putting in APR and not interest. Sorry, the fixed interest rate. There's a slight difference between annual rate and APR. So make sure that when you get your agreement, you're actually putting in the APR figure. I've done a separate video on the channel, so I'm not going to go into that now. And that video covers the differences between flat rate and annual rate and APR and annual equivalent rate and all these different terms. So make sure you put the APR in there. So let's say it's 4.9. And let's say we're borrowing this amount of money, or we're financing this car over 36 months. This is the biggie. This is the important bit. And I've put there, look, important, enter equal payments. I've mentioned this loads and loads of times on the channel. If you take out a PCP and it's 3 years or 4 years, make sure you know whether it's 48 equal payments and month 49 is where the balloon payment lies in the case of a 4-year agreement, or with a 36-month agreement, is it 36 equal payments and month 37 where the final value lies, or is it 30, what I call 35 plus 1 or 47 plus 1? And that's why sometimes this spreadsheet will give you a different result slightly on your monthly payment. So let's say this is a 48-month agreement, but it has 47 equal payments, and month 48 is where your balloon payment lies. So I'm going to put 47 in there, not 48. 3 months is something which I played around with. I was never overly happy with that, but it's still on the agreement. Still on the spreadsheet, sorry. And that is basically certainly over lockdown, to try and incentivize people to take out car finance. A lot of people were giving you 3 months, or it was basically a deferred payment. So you took out a 4-year agreement, but you had the first 3 months off. It wasn't actually 3 months free unless it was 0%. Interest was usually still accruing, and all they were doing were taking the 48 months and dividing it by 45 payments. But anyway, that's by the by. It's still in there, but you probably won't need to use that. Excuse me. So let's have a look at what the spreadsheet's coming out with. So it's showing that we've got a monthly payment of £353.34. That's give or take 50 pence or so, in my experience, when I've compared it with the real agreement. So it's pretty much there. It's all to do with the rounding of the interest rate calculations. Because, for example, even though it's 4.9, it could be 4.86. Rounded to 4.9, so it can yield slightly different results. Okay, now this is the bit which I've just included in version 6.1. So let's say we make an overpayment. If you look here, the voluntary termination point is essentially on any regulated agreement under a certain amount, whether it's PCP or HP. If you have paid 50% of the total amount borrowed, and that's including interest charges and any deposit you've made, once you've paid 50% of that, you can hand the car back, providing you've taken reasonable care of it, etc., and providing the mileage is correct. So in this case, look, it's telling me that we could effectively, if we got into financial difficulties, because that's what the VT point is really there for, after you've made 41 payments, you could hand the car back. Even if the car was worth 5 pence, you could hand it back. Now, what the previous version did, and what people have got at this moment in time, if I were to put an overpayment in, it wouldn't affect where the VT point lies. So it would still tell you, in this case, 41 months, even if we put, say, a £5,000 overpayment in. So that's not correct. So what I've done now, look, I've revised it. So let's say month 6, we come into a bit of money and we make an overpayment on the agreement, and let's say it's, I don't know, £2,000. Not only does it tell me there, look, the amount of interest we would save, so about 320 quid or thereabouts, but you can see now, and I think this is working correctly. If anyone gets this after this video, please tell me if it doesn't seem to work properly, because I'm always, as you know, amending bits and revising the spreadsheet. But it now tells me, look, that because we've made that £2,000 overpayment, we could effectively hand the car back after 33 months, okay, with the interest saved, etc. We add another one, maybe we add another £1,000 here, look. Again, it moves it forward. And you can see the pink box here is getting higher and higher up the amortization table, because that's where you've effectively reached, or when you've effectively reached your balloon payments. You can see here, look, our guaranteed future value was £15,000, and because of those two separate overpayments, we've now effectively reached the balloon payment at month 36 rather than month 49. So that's quite useful, and that's part of the new revision. Something which I did on the last revision, the major release with version 6, was where you could compare two different agreements. So let's just take the overpayments out. Let's say we go to another dealer, and rather than the car being £30,000, let's say it's £29,500. We put the same deposit in. So if you remember on the first example, we put in £1,000 and the dealer deposit contribution was £1,500, which means we're still financing £27,000. Same guaranteed future value, which is £15,000. Option to purchase fee exactly the same, £10. Starting month was November 2020, but this time the APR was, what did we say previously? 4.9. Let's say it's 5.1. Still a 47 plus 1 agreement, so 47 equal payments, 48 is where your balloon payment lies, so that's 47 in there. And now what we can do is we can go to this summary comparison tab here and actually compare the two. So as you can see, I've done something wrong there. Oh no, that's fine. So if we go to summary comparison, we can see that the yellow boxes represent the first agreement and the blue boxes represent the second agreement. So we can see that our, what will it be? Our first agreement, look, is £8.21 more than our second agreement. So even though our APR was 5.1 on the second agreement and 4.9 on the first agreement, it's still cheaper because we've put that because the purchase price was £500 less. So that's quite useful. It will also tell us where our VT point lies. So let's say in here, if I type in, let's say how much will this cost me to settle roughly after 2 years? So if I put 24 in there, look, it tells me that the first agreement will cost me 21,271. And the second agreement will cost us 15,645. Now that's obviously not correct. And I imagine that's because, yes, when I was trying this earlier, I've still got an overpayment in my second tab. So let me just get rid of that. Right, let's go back. There we go, that makes more sense. So £8.21 a month difference between example 2 and example 1. And you can see also that the first agreement after 24 equal payments will cost us 21,271, give or take 100 quid or so. And PCP agreement 2 will cost us 21,040. So you can see that if we wanted to settle this after 2 years, it would be £231 cheaper to settle the second agreement versus the first. Okay. So then we've got at the bottom this box that says total difference after how many months including settlement. Basically what that does is it takes the difference in the settlement values, so you can see here £231 less to settle on agreement 2 versus agreement 1, and it also takes off 24 in this case times the difference in monthly payments, if you see what I mean. So it was £8.21 a month cheaper to get there, to get at this particular settlement point, so it's doing 24 times 821, and it's also taking the difference between the two settlement points on the two agreements, and it's telling us that overall, if we were to settle at month 24, the second agreement would work out £428 cheaper than the first one. Slightly higher interest rate, but we're putting in £500 more at the beginning effectively because our purchase price was 29,500 versus 30,000. Okay. The one other thing which I would just like to go over is this incentive box. And I've talked about this before, and there's a video on the channel. This is all to do with the fact that if you go into, say, and this has happened to me, you go into a showroom and they offer you finance, and they say, if you take our finance, we will give you an extended warranty, or we will give you a free service pack. And I added this because I was never convinced that it was worth having. So let me just show you a separate example, because in my experience, when they offer you something like this, the interest rate is quite high. It was on a used vehicle. So let's say we had a purchase price of 25,000. Deposit will have the same and a guaranteed future value of 10,000. But the interest rate was 11.9. So you can see it's costing us £426 a month. So what the dealer might say to you, and I'm never quite sure whether this is actually legal, they might say you can keep this incentive that we're going to give to you as long as you run our finance for, say, 9 months. That's what they told me. So whether that's true or not, whether that's legal, as I say, this enables you to work out whether actually it's worth taking their finance and getting the incentive for free, or whether to walk away and buy the incentive separately. So let's say the incentive price is £2,000. Let's say it's a 2-year warranty. And let's say that we've been told that we need to keep this agreement running for, say, 9 months to keep the incentive. Okay, so I'm going to put a 9 in there. Okay, it's telling me, look, that in this particular situation with an 11.9% APR, £2,000 incentive price, it's actually going to cost us £195 more. Let me just zoom in a little bit on this. It's actually going to cost us £195 more doing it this way than actually not taking the finance and paying £2,000 for the incentive. Essentially what it does, look, it just says, okay, after 9 months, how much will you have paid on the agreement? So it's doing 9 times 426. So we've paid £3,836. But how much have we actually dropped the capital by? So what it does is it says, okay, let's say after 9 months, you want to phone up the finance company and you want to pay that off. How much would it cost to settle with all the interest, etc.? So it goes down to month 9 of the amortization table, and it says here, look, okay, it would cost now this is always slightly different depending on the way that the early settlement is calculated, etc. But give or take 50 quid or so, it's 20,858. So we've paid 3,836, but we've only dropped the capital by the difference between 22.5 and 20,000. What was it? 20,850. So probably what's about 1,650. So if you take 1,650 off the total amount we've paid, which is 3,800, it's actually cost us £2,195 for that £2,000 incentive. So it's quite a useful little feature. If you're wondering whether it's worth taking finance out to get this incentive, definitely use that bit of the spreadsheet. Okay, as always, I hope that was useful. I hope you've learned something. I appreciate it was a little bit complicated in places, so if you have got any specific questions about this, feel free to comment below or send me an email here. As always, send me an email here as well if you'd like a copy of this spreadsheet and all future updates. As I said at the beginning, one-off payment of £10 will get you as many updates as I ever make. Anybody who's already obtained a copy will be finding version 6.1 landing in their inbox very soon. Do continue to comment. Please subscribe if you haven't already done so. We're still only at about 13% of everyone watching these videos. Only 13% of you are a subscriber, so I'd really appreciate if you hit that subscribe button. Do hit that bell icon so that you're notified as and when I release a new video. As I said earlier, do check out directgap.co.uk, and a dedicated video discussing more about Direct Gap will be coming in the future. So if you are considering buying a gap policy, please stay tuned over the next couple of weeks and that video will be coming. Okay, so until next time, take care. Thanks for watching.